In this lesson I will talk about Pip and Pipette, which are the smallest price change in the currency pair. The chart on the left side was taken from MetaTrader 4 platform. I have used EURUSD trading pair as an example to show you all details about Pip and Pipette. On the bottom of the image you will see a list of open orders. There are 3 orders open at the same time, but with a different lot size, to give you overview how it looks like in MT4 when order is open. 3 lot sizes are standard lot size, which is 1.00, mini lot size, which is 0.10, and micro lot size, which is 0.01. The order example is there to give you more details how it will look like when you use MT4 by yourself. In the example, I have opened sell order at 1.10890, predicting that the price will go down. Sadly, the price have gone up and my result is bad. The current profit is minus 54, which means 5 pips and 4 pipettes. Let me give you more details about the pip before continuing and moving further. Pip is a small change in the price of a trading pair. The chart on the left side shows a change in the price of the trading pair. The price have changed from 1.10890 to the 1.10944. The price shown on the chart have 5 decimal places. The 5th decimal place is a pipette, so I will remove it to explain the pip first. In the next few slides I will return the pipette to clarify you what pipette means. In the past, the price with 4 decimal places was standard, and today some of the brokers still have price of a trading pair with 4 decimal places. 5 decimal places are used to lower the spread, so broker can offer to traders. Broker can offer to use spread lower than 1 pip, because he can split the pip into 10 pipettes and offer you spread as low as 0.5 pips, which is 5 pipette. Which broker would you select if one offer 2 pips spread and second offer 1.5 pips? All of us would select 1.5 pips, because we want to have smaller cost per trade as possible. Now let's get back to the pip. You need to learn that the price of a trading pair is shown with 4 decimal places. The smallest change in the trading pair price, like if we had changed from 1.1094 to the 1.1093, is changed by 1 pip. The change by 0.0001 in the trading pair price is a change by 1 pip. In our example from the chart, we have price change from 1.1089 to the 1.1094. When we calculate the difference between those two prices, we have 1.1094 minus 1.1089, which is equal to 0.0005, which gives us a change by 5 pips. Depending on the type of the order, buy or sell, pip change will have value in plus or minus. Our example have sell order and I have expected that the price will fall down from the price of 1.1089. But the price have gone in the opposite direction and reached to the 1.1094. The final amount I have gained from the sell order is minus 5 pips. Now you need to learn what is pipette. The pipette is smaller unit than a pip. To get 1 pip, you need to have 10 pipettes. In our example from the chart, we have changed in the price from 1.10890 minus 1.10944, and the difference is 54. We have difference of 5 pips and 4 pipette. This is also same as 5.4 pips. Have in mind that we cannot have 2 decimal points in a number like 1.1094.4. That is why you need to remember that the last 2 number in a price of a trading pair with 5 decimal places is the same as 4.4 pips. Our example 1.10944. While the order was sell order, I have the result in minus of minus 54 because I did not predict the correct price direction. One note you need to have: pipettes have more influence in your trading if you trade on smaller time frames, like 30 minutes time frame and lower. On the higher time frames, you are not looking to catch 1 or 2 pips, but 10, 20 or 100 pips. Those small pipette will not be so important to you. Here is an explanation of what you need to do in order to set a stop loss and take profit when you have trading pair price shown with 5 decimal places. That means you have trading pair price shown with pipette. In our example from the chart, we have change in the price from 1.10890 minus 1.10944 and the difference is 54. We have difference of 5 pips and 4 pipette. If I want to set stop loss, I need to find the price that is above the current price. The price can be from 1.10944 and above. If I want to have stop loss at the price 1.10955, then I will set stop loss that will be minus 65, which is 6 pips and 5 pipette, or 6.5 pips. Remember that the value you see in the column profit is shown with pipette and you need to divide that amount with 10 to get the correct value of how much of pips is the profit. If I want to set take profit, I need to find the price that is below the open price. The price can be from 1.10890 and below. If I want to have take profit at the price, for example 1.10865, then I will set take profit that will be 25, which is 2 pips and 5 pipette, or 2.5 pips. Remember that the value you see in the column profit is shown with pipette and you need to divide that amount with 10 to get the correct value of how much of pips is the profit. So as a result I have 25, but when I divide that with 10 I get 2.5 pips. In the next part of this lesson I will show you how to calculate the pip value, because the pip value depends on the lot size you will use on each trade you open. For example, standard lot size will give you different pip value compared to micro lot or mini lot. As a first example, I will use Euro-USD trading pair. First lot size will be micro lot size, which is 0.10. The value of a pip with a micro lot size is 10 cents or $0.10 per each pip. We have change in the price by minus 54, which means 5 pips and 4 pipettes. We write this as minus 5.4. While 1 pip change is equal to $0.10, I have change on my account by the amount of 0.10 multiplied with minus 5.4 gives us $0.54. In the next example, I have used mini lot size where 1 pip is equal to $1. So in the same example on the chart, we have change in the price by minus 54, which means 5.4 pips. So when I calculate the pip value with $1, I get minus $5.40. When you use mini lot size, the pip value is 10 times more than the micro lot size. So in an example where we have minus 5.4 pips in minus, we will have minus $5.40 as a result. When we use a standard lot size, then the pip value is equal to $10. So minus 5.4 pips will give us minus $54, which is 10 times more than the mini lot size. So if you do not want to lose a lot of money, do not use standard lot size unless you have a pretty decent account balance. In our second example, we have USD with the CAD. What is difference is here that the USD is the base currency and the quote currency is Canadian dollar. The lot size for the standard and the mini micro lot size will be different. The value of a pip will not be equal $10 for the standard lot size because now we have different calculation for the pip value on each lot size. And why is that? The difference is that the account balance is in the US dollars. And the pip value can be equal $10 for one standard lot only if the US dollar is the quote currency. That was the case with Euro-USD, but now when the USD with the CAD is on the first place as a base currency, the calculation of the pip value will be different. Here is the formula how to calculate that. So in a case when we have micro lot size 0.01, pip value is equal to 1 pip multiplied with the contract side divided with the current price of USD CAD. So in our example we have 0.0001 multiplied with 1000, which means for the micro lot size, divided with the current price, which is 1.31380, and that gives us 0.076. We have changed the price by 69, which means 6 pips and 9 pipettes, and we can write that as 6.9. So the pip is equal to $0.076. I have changed on my account by the amount of 0.076 multiplied with 6.9 gives us $0.524. In a case when I use mini lot size, everything stays the same, but only the value is multiplied with 10 because mini lot size is 10 times larger than the micro lot. So at the end I get as a result $5.24. In case of standard lot size, I get 10 times more, which gives me $52.40 as a result. In the next example, I will use USD with the Japanese yen. Now the difference is here that USD is again base currency, so the pip value will not be equal to $10 for one standard lot, but I need to calculate again the pip value. So the pip value should be calculated like this: 1 pip multiplied with contract size divided with current USD Japanese yen price on the market. So that gives me 0.091. When I calculated the current status, which means 8.5 pips, I will get $0.773 as a result. When I use mini lot size, I get 10 times more, which gives me 7.73. And for the standard lot size, I get $77.30. In the case of Euro CHF, we have a case where our account balance is in US dollars and we are trading Euro and CHF, so there is no US dollar in the quote. So we need to make another calculation here. First, we need pip value in US dollar. We need to use CHF USD pair, but that pair does not exist. And we need to make the price of the USD CHF by dividing 1 with the current price of USD CHF. So if the current price of the USD CHF is equal to 0.99250, we get the value of 1.007. So the pip value will be 1 pip multiplied with the contract side multiplied with CHF USD divided with the current price of Euro USD. Contract size is standard lot, micro lot or mini lot, but in our case as the first step we will use micro lot size, and that gives us 0.0001 multiplied with 1000 multiplied with 1.007 and divided with the current price of Euro USD, which is 1.10606, and that gives us a pip value of 0.091. So in our example on the chart we have changed the price by 30, which means 3 pips and 0 pipettes. So when we calculate the value, that is 0.091 multiplied with 3 pips equals to $0.273. In case of mini lot size, we will get 10 times more, which means $2.73. And in case of standard lot size, we get $27.30. So at the end, what is good to know? Each trade depends on the amount of pips you will set for stop loss and take profit. Each pip can have different value, and amount of pips define your loss or gain. Account with huge amount of money could look for a large amount of pips. Each trade depends on the amount of money you are willing to lose or you want to make. Stop loss and take profit must be set by a trading strategy. Each pip in a trade have a value which you define by the lot size or column volume on the MT4 trading platform, because the lot size will define how much each pip will be valued. Each pip value depends on the trading pair you will trade. As you have seen in the examples, the pip value for the standard lot size will be different if you have US dollar as your account balance currency and if you trade Euro CHF. Each pip value depends on the trading account currency, so the trading account currency defines how to calculate pip value. So if you like this, like it and subscribe and share it with your friends. Thank you for listening Happy trading and see you next time in the next lessons.